Welcome to the Office of Tax Appeals. My name is Andrew Pui, and to my right is Jeff Anjija, and to my left is Teresa Stanley. We are the administrative law judges who will be conducting this appeal for OTA, and OTA is a separate and independent agency from CDTFA. Our role here is to conduct and decide this appeal. So in a few minutes, we're going to be going on the record, and by on the record, I mean a certified shorthand reporter will be transcribing what is said today, and this transcript will become a part of the record and will be available on our website for public viewing. After we go on the record, I will ask everyone to identify themselves and who they represent. But first, I'm going to pick up where we left off at the pre-hearing conference and just cover a couple housekeeping matters. So on the tentative witness, it looks like Mr. Eric Stein is here today, is that correct?
Yes.
That's correct.
Okay, and CDTFA has no objection to the witness testifying, is that correct?
Correct.
Okay. And on the exhibits for CDTFA, I understand that we have exhibits A through E, and that's the same that we described at the pre-hearing conference and as described in the minutes and orders that I sent to the parties. Is that still correct?
Yes.
Okay, great. And for the taxpayers, I have exhibits 1 through 79. And those are the same exhibits that we previously discussed at the pre-hearing conference, and they're summarized in the minutes and orders that I sent to the parties after the pre-hearing conference. Is that still correct?
That's correct.
And you had indicated, I believe, that you might be providing one more exhibit summarizing the evidence. Are you going to be submitting that today, or did you?
We, as discussed at the pre-hearing conference, we emailed that exhibit to the info at OTA website and also to Pamela Bergen at the CDTFA, which I believe were the instructions that we received.
Oh, so yeah, we had the evidence at ota.ca.gov, and I checked and I was informed that we did not receive that exhibit, so I do not believe. Could you bear with us for one moment, because I don't believe the judges have a copy of that document.
Sure. Yeah, I have to pull up my laptop, if that's okay. Okay.
Yes. Yes, we do. Just okay.
Okay, let's go off the record for 1 second while we make a photocopy of the document.
So info at OTA is an email?
I think I sent it to evidence at OTA. But I'll double check.
My copy has my notes on.
He'd like that.
Yes.
So if you're able to email it to us, I think we can print it right now.
Just refer to them.
I can forward it to you right now.
Yeah, that'd be great, thank you.
Did the department receive it at Pamela?
Yes.
They did? Okay.
And we're off the record right now. Okay.
Oh, can you send this?
Actually, I wasn't. Okay, so while they're photocopying the document, I'll just continue with the pre-hearing housekeeping matters. So did CDTFA have, is CDTFA ready?
Did you want to go back on?
Oh, I'm not ready to start on the record yet.
Okay.
So yeah, just hold on, I'll let you know when I start.
Okay, thanks.
Did CDTFA review and have any objections to the document that the taxpayer submitted?
Mr. Claremont did receive a copy. I was CC'd on it, however, the email was incorrect, but Mr. Claremont forwarded me a copy, so yes, I did have the opportunity to review.
Okay, and there's no objections to it?
Correct.
Okay. So then we have 80 exhibits for the taxpayer then. And the taxpayer does not have any objections to any of the CDTFA exhibits also, is that correct?
I'm sorry, what was the question?
Oh, the taxpayer does not have any objections to any of the exhibits, the 5 exhibits provided by the taxpayer,
No.
CDTFA tax agency. Okay, great. So when we go on the record, I will admit all the evidence that's been provided to date, and I'll just again ask you to confirm that there's no objections when we go on the record. So during the pre-hearing conference, we also discussed some of the facts, and did you review the pre-hearing conference minutes and orders, and do they accurately summarize the facts that are agreed upon by both parties so that we can just assume those facts are correct in our decision?
I'm sorry, did you want me to look for that email, or do you want me to listen to you, because I can't do both at the same time?
Oh, I'm sorry, are we waiting for you to look?
We have the email.
You have the email? Okay.
Oh, I'm sorry, okay. So just let me know when you're ready to proceed.
I'm ready.
Okay, so I guess I'll first start with the department. The department received the pre-hearing conference minutes and orders, is that correct?
Yes.
And are the facts that were agreed upon by the parties, did you review them, and are they correct to your understanding?
Yes.
And there's no objection to that?
Correct.
Okay, and so for the taxpayer, you received the pre-hearing conference minutes and orders that I sent out, is that correct?
Yes.
And the statement of agreed facts, is that correctly summarized in there and as agreed to by the parties?
Yes.
Okay, great. So when we go on the record, I'll again ask everyone to confirm that these facts are agreed to by the parties and there's no objections. And aside from that new EDF exhibit, are there any other materials that either party would like to distribute at this time?
No, thank you.
Great. And I also at the pre-hearing conference mentioned that OTA would be raising a new issue at the oral hearing that was related to the second issue on appeal, and I just wanted to confirm that the parties are ready to proceed with that and address it at the hearing.
Yes.
Okay, great.
What is this new issue?
Oh, that issue was whether it was appropriate to go expand the audit based on purchases that were outside the test period and project them to the entire audit, or would that appear to be picked up from outside the test period and projected to the entire audit, and I just wanted clarification on that. Okay. So just as a friendly reminder, the time estimates that we had discussed at the pre-hearing conference, we were going to start with the taxpayer's opening, which should be under 20 minutes, followed by the CDTFA's opening, which should be under 15 minutes. And then the witnesses will have approximately 20 minutes to do their testimony, followed by closing argument, which should be 10 minutes per party. Is that as everyone understands?
Yes, however, we would waive opening and just give one presentation.
Oh, okay. So, so this exhibit, just to clarify my understanding, this is just a summary of the other evidence in the record. Is that correct? Or
Yeah,
something to do with
the auditor had done a bank deposit reconciliation, but her reconciliation just showed monthly deposit totals and no additional information, and we thought it would be useful or potentially useful to take those bank statements and show the dates of the deposits, the deposit type, and the source of the funds.
Okay, great, got it. So I believe with this, we are now ready to go on the record. So if everyone's ready to proceed, we'll start by opening the record in the appeal of VA Auto Sales, Inc. Before the Office of Tax Appeals, OTA case number 1807-3394. Today's date is Wednesday, August 21st, 2019, and the time is approximately 2 o'clock p.m. This hearing is being convened in Los Angeles, California. And for the record, will the parties at the table please state their names and who they represent, and we'll start with the CDTFA.
Sunny Paley for CDTFA.
Scott Claremont for CDTFA.
And Lisa Renati for CDTFA.
Mark Brandeis for the taxpayer, and to my right is Eric Syme, the taxpayer.
Okay, thank you. Today's hearing is being heard by a panel of 3 administrative law judges. My name is Andrew Kui, and I will be the lead judge. Judge Jeff Njija to my right and Judge Teresa Stanley to my left are the other members of this tax appeals panel. All 3 judges will be meeting after the hearing and will produce a written decision as equal participants. Although the lead judge, myself, will conduct the hearing, any judge in this panel may ask questions or otherwise participate to ensure that we have all the information needed to decide this appeal. The documentary evidence marked for identification includes Exhibits 1 through 80 for VA auto sales and Exhibits A through E for CDTFA. The exhibits are described in the minutes and orders that was sent out after the pre-hearing conference, with the exception of Exhibit 80, which is a document titled Bank Deposit Detail Reconciliation to Audit Schedule, which was provided, which was handed out at the hearing today. And there are no objections to any of these exhibits. The parties have agreed to the facts as also summarized in OTA's minutes and orders for the pre-hearing conference, and the parties agree that these facts are correct and not disputed. Will the parties please confirm for the record that this summary that I have just provided is correct and that they have no objections to admitting any of this evidence into the record as I just described? Counsel for CDTFA?
Yes.
Okay, counsel for the taxpayer?
We have no objection.
Great, thank you. So the above evidence is now admitted into the oral hearing record, and we're ready to move on to the taxpayers. Just to summarize the issues in this appeal, there's 2 issues in this appeal, and the first issue is whether the taxpayer is liable for sales to use tax in connection with the transfer of salvage title vehicles. And the second issue is whether the taxpayer made a taxable use of any salvage title vehicles prior to resale. And the new issue, new question, is at the pre-hearing conference, I placed the parties on notice that OTA is also raising a question with respect to the second issue, and that question is whether it is reasonable to project errors that appear to be from outside the test period to the entire audit period when the audit liability was established based on a test period. And the parties have both indicated they're able to proceed with this at the oral hearing. So with that said, I believe we're ready to proceed with the taxpayer's opening presentation. Would you like to proceed?
All right, good afternoon, panel members. I'd like to start with a little bit of the nature of the taxpayer's businesses. I use the word plural businesses because he does own and operate during this period of time 2 separate and distinct businesses. One is one business is the business in question in this matter before this panel, VA Auto Sales Inc. And the other is a clothing business, Sexy Star Design Inc. Both entities were selected for audit around the same time and covering nearly similar periods. VA Auto covers the audit period January 1st, 2011 through 12/31/2013, and Sexy Star Design covered an audit period of October 1st, 2011 through September 30, 2014. Both audits were performed concurrently by a tax auditor from the West Covina field office. Both entities are corporations that are owned and operated by Mr. Syme. Both entities had no prior audits. Let me start with the audit of Sexy Star Design. The audit of Sexy Star was summarized in a report of field audit dated 9/18/2015, which we supplied as Exhibit 1, disclosing additional taxable measure of approximately $419,000. The auditor made the finding based on a 3-quarter test period. When we presented sufficient documentation that disproved her audit, she then changed her audit approach and submitted a new report of field audit dated 4/19/16, which reduced the taxable measure to $145,000 approximately, an additional taxable measure. That's Exhibit 2. That amount consisted of 2 separate findings. First, reported versus audited exempt sales of approximately $84,000 a measure, and a bank deposit versus reported analysis, which resulted in approximately $61,000 in measure. Again, we provided documentation to review her audit findings. She refused to accept the documentation. We appealed to the principal auditor at the time, who looked at what we had provided and ordered the liability reduced to zero. We received that new revised report of field audit dated 7/1/16 showing no unreported taxable measure. The audit became a no change. I point this out because it is my opinion that the auditor who was assigned to this case was inexperienced. The things that she was questioning, for example, the bank deposits, one of the items that I remember in particular when she was doing her bank deposit analysis was that she was questioning a large deposit of approximately $20,000. This is in the audit of Sexy Star, the clothing retailer. And that deposit was wired in from one individual, and we informed her then that deposit was the person who wired the $20,000 was making a purchase for resale. I mean, what other conclusion can you draw? Who's going to buy $20,000 worth of jeans and t-shirts if they're not reselling it, or your last name isn't Kardashian? I mean, this should have been an obvious sale for resale allowance, but she just couldn't accept it. So we had to take it all the way to the principal auditor, who, fortunately for the taxpayer, did see the error in her judgment and did eliminate the audit liability in its entirety. However, we also had the audit of VA Auto Sales, which started out with, well, let me give you the background on VA Auto Sales. So VA Auto Sales operates as a wholesale dealer in used cars that are purchased from insurance auto auctions. The insurance auto auction sells salvage vehicles that have been involved in accidents. The insurance companies deem these vehicles to not be redeemable. They're just not, it would cost more money to repair them and put them back on the road, so they're just written off. And to mitigate their losses, the insurance companies then sell these vehicles to these insurance auto auctions to help recoup some of their losses. So these vehicles cannot be sold to the public and put back on the road. In fact, as the department has also pointed out, they're not even considered vehicles as under the vehicle code. They cannot be driven, they cannot be registered. In order for these vehicles to be put back on the road, they would have to be repaired. Those vehicles would then have to be inspected by the California Highway Patrol, and I don't know if it's DMV as well, but they have to go through an inspection process. And then after that, they would get a salvage title, and then they could be put back on the road. But as you can imagine, if you look at the documentation of the vehicles that are being purchased, I mean, we're talking about 10, 11-year-old Toyota Camrys here. Nobody is going to buy one of these vehicles and fix them up. It's just not economical. These are not collector's item type cars. Nobody's going to do it. So there is a market for these vehicles, and that is in their parts. The only value left in these vehicles is in their parts. So VA Auto Sales buys these salvaged vehicles from the companies like Insurance Auto Auction, I think Copart, and there was a third one, but the lion's share of them are from IAA, Insurance Auto Auction. Mr. Sign holds a wholesale dealer's license with California Department of Motor Vehicles. What that means is he is licensed to make sales of vehicles at wholesale only. He's not licensed to make any retail sales of vehicles. If he were to do so, that would be considered a crime. Mr. Sign, through VA Auto Sales, contracts with purchasers in Cambodia. He is also of Cambodian descent. There are two main purchasers, a Mr. Suvi and a Mr. Kim. These foreign purchasers bought, so what the Insurance Auto Auction website allows you to do once you have an account set up, it allows you to set up buyers under your account. So he's given there's four of them. He's given these four trusted purchasers login credentials that are under his credentials as VA Auto Sales Inc. These four individuals are in Cambodia. They log into the website, They find the vehicles that they want, they bid on them. If they're successful in the bid, then it works a little different. In 2012, some of the purchasers sent him the money, and then he wired the money to the insurance auto auctions. Some of them just sent the money directly to the insurance auto auctions. Excuse me. The buyers would then, after making the purchase, would make arrangements with a company called Packers Express. A driver would pick up the vehicle at the insurance auto auction, bring it to Packers Express facility in, I think it's Wilmington, California. Packers Express, who took their orders not from Mr. Sign, but from the purchasers in Cambodia, they would either put the entire salvage vehicle into a shipping container, but some of the vehicles they would dismantle into parts, and they would put the parts into the vehicle containers. When they put the entire vehicle into the containers, they listed on the weigh bill the VIN number of the vehicles. When they put just the parts into the shipping container, they only listed, they would put down a notation that said one lot auto parts, no VIN numbers, no other notation. So Mr. Sign's business model for VA auto sales was to make a small commission on the purchase of each vehicle. He made approximately anywhere from $60 to $80 in commission. So this is a very low involvement business for him. Almost all his time is spent with the clothing business. Okay, the purchasers are logging on, they're making the bids, they're arranging for the vehicles to be picked up, they're wiring the money to the insurance auto auction, they're emailing instructions to Packers Express, and Packers Express is then shipping the vehicles to them in Cambodia. Mr. Sign would then, I don't know if he did it weekly, monthly, but on an occasional basis he would log into his account at IAA, he would get a report, he would then send he created a sales journal, a handwritten sales journal, and he would send an invoice to the purchasers. This is how many vehicles you bid on and were successful, times $70, and whatever that amount came to, then that's how he would get paid. So it was really very, very little involvement. In fact, as he described it to me, this is something he did when he came home from work at his dinner table. He'd log in and update the sales journal and send some invoices out. At the end of the year, then he filed a sales tax return and he filed an income tax return. So one of the problems that the auditor had in looking at this is there was looking at the 414Z, which is the assignment contact audit history. I could tell that there was some back and forth with getting access to the records. Mr. Sign's English is not the best. There were some issues with the BNR letter, the BNR 80 letter, which is the initial letter that the department sends out informing a taxpayer that they've been audited. The auditor notes in the Z that the letter came back undeliverable. So there's a myriad of reasons which led to some confusion as to what records do you want to see and what is the audit period and so forth. At some point, I think those issues largely did get resolved based on reading her comments in the audit. She largely then said, okay, and if you look at the transcripts of the returns that he filed, again, as somebody who's a former auditor myself, 1 year the taxpayer claimed $900,000 in, I believe it was interstate commerce, and then 1 year he claimed $20,000 as other deduction, which turned out to be his commissions, and then the third year he claimed 50-some thousand in resale. So as an auditor, I'd look at this and go, why is this all over the map? What is going? This is somebody who doesn't know what they're doing. The bottom line though is on each one of those returns, he reported gross receipts, a deduction in one of those three categories, net taxable was 0. He wasn't reporting any taxable sales. Why? Because all the vehicles, 100% of the vehicles, were being sold to these 4 individuals. They were being shipped to this Packers Express. They were then being shipped to Cambodia. There's not one vehicle that was sold at retail in the state. I'm using the term vehicle loosely because, as we described earlier, these are technically not vehicles that would be considered a vehicle under the California Vehicle Code. But the auditor decided, and again, I think this is somewhat maybe inexperience on her part, she decided to run a test and said, well, if all these vehicles are shipped out of state, I want to do a test on shipping documents. Get me all the shipping documents. Well, he didn't have the shipping documents because the purchaser made all the shipping arrangements with the shipping company. So there was, again, another disconnect between the taxpayer and the auditor in getting the shipping documents from the shipping company to the auditor. But that said, when all was said and done, the auditor, even in her general comments, notes that the taxpayer's records were adequate for sales and use tax purposes. He provided income tax returns, he provided a sales journal, he provided bank statements, she circulated the insurance auto auction. She had purchases from all 3 of the insurance auction companies. She had everything that she needed. She even had, and she uses the word fragmented, and I agree with that phrase. She had fragmented shipping documents. She did also complain that she didn't have any invoices, but I would argue, based upon the way the taxpayer is operating, invoices weren't necessary in this type of business. This is a business where somebody's going online, making a purchase. Everything is already pre-arranged, pre-negotiated between him and these 4 individuals. The model is, I get $70 per vehicle. That's it. There's no sales invoices or written, I mean, he might have had a written contract with them, but there's no sales invoices. So the bottom line is she concluded that records were considered adequate. There's no penalty being applied in this audit, but yet she bases the entire audit on the vehicles that he cannot provide a shipping document for. Well, initially we told her that again, the main issue is that the vehicles that were dismantled, the shipper didn't write the VIN numbers, and we don't have anything to show that, other than you can clearly see on 90-some% of the way bills, it lists underneath the vehicles that he did record VIN numbers, One Lot Auto Parts. She'd had some email exchanges with the a representative from Packers Express. There was a number of emails back and forth. He provided an additional list of VINs that he says were dismantled vehicles. What records he looked at, how thorough he was, we don't know, because he did not have a real relationship with Packers Express. But that did not cover every single vehicle in question. At any rate, on appeal, she started out at $5.8 million. We met with Larry Nakano. We agreed to limit the audit to a block sample, third quarter 13. She ran this test on claimed exempt sales exempt sales in interstate commerce for third quarter 13. Again, we weren't able to provide way bills for each and every vehicle shipped because, again, I don't know how thorough this person was when they went through their records over at Packers Express. However, there's another way that these vehicles could be exempt, and that is they could be exempt as a sale for resale. We've made that argument over and over again. Larry Nakano mentioned it in one sentence in his 836. But these vehicles are also exempt as a sale for resale. They're being sold to the same 4 individuals over and over again. And what are those 4 individuals doing with these vehicles? They're either reselling them to somebody in Cambodia, or they're dismantling them and selling the parts from the vehicles to somebody in Cambodia. So she never considered that. She just became singly focused on the shipping document issue. The other thing is, when you look at the audit, there's a number of inconsistencies. They're saying that, well, let me back up. When we made our case before an appeals attorney at the appeals conference, the issue was raised as to if they're disallowing these deductions, then the conclusion is that he must be making retail sales of these vehicles. Well, there's only two possible conclusions that you can reach. Either he's trying to retail the salvaged vehicles. I can tell you right now, there's no market for making a retail sale of a wrecked Toyota Camry. There's no market for it. Nobody is buying those at retail. Okay. So then the only other conclusion that you can come to is that he's buying these vehicles, dismantling them, and then selling the parts, and for a markup of 1.54%. This is absurd. There's no way that could happen. Let me explain why. Number one, VA Auto Sales has no physical location unless you consider his home his physical location. There's no lot, there's no physical store, he has no website, there's no internet presence, he doesn't advertise in any magazines. There's just no way for customers to know about him and find him. Number two, he has no employees. Buying these vehicles, dismantling them, inventorying them, photographing those inventory parts, assigning a price to them is a labor-intensive process. There's no way you can do this without employees. He has no employees. Number three, if it were operating that way, he'd have to be there all the time because this has to be a cash-based business. There's no 1099-K. He's not taking credit cards. And the risk, if you're not there, of having employees assign prices to items and then selling them for cash, that the employees are not going to pocket some of that cash, the risk of that is enormous. So you'd have to be there all the time. You would have to be there, you'd have to have tight inventory controls. This would be a labor-intensive business. There's no advertising. In order to do it, you would also have to have a California dismantler's license. Otherwise, the California Vehicle Code says that they could consider you to be a chop shop. So you can't dismantle vehicles without a California dismantler's license, which he doesn't have. The other thing is, so I said, well, let me look at who would he be competing against? Well, the biggest one that I could find is Pick Apart. So I went to their website. I looked at they have a facility in Orange County that takes up an entire city block. There's hundreds and hundreds of vehicles parked on that site. They have on their website, one of the things they're advertising is 40% off for the next month, 40% off. Why are they giving 40% off? There's high markups in that type of business. The department says he has a markup of 1.54%. This is absurd. There's no employees, no physical location, labor-intensive business. It would have to be all for cash, all for a 1.54% markup. Absurd. But what's really going on here is the auditor is failing to conduct the audit in a professional manner. And here's what I mean by that. Audit Manual Section 0101.20. Tax auditors are a professional tax classification. They're not clerks, they're professionals. The job of a tax auditor requires them to look at things and to look at the whole picture, versus what a clerk would do. A clerk would say, you claimed a sale in interstate commerce, you don't have the shipping document, that's an error. End of story. That's what a clerk does. The board is not looking for clerks. These are not clerks, they're professionals. They're supposed to be inquisitive. They're supposed to ask themselves, okay, let me interview the taxpayer. Let me find out from him what his story is. They're supposed to be skeptical, but they're supposed to be professionally skeptical. Professional skepticism is the bedrock of auditing, but it seems to be that the auditor is going beyond professional skepticism, and applying an unreasonable amount of skepticism here. She's applying an unreasonable amount of evidence. Now, what is the standard of evidence? Standard of proof, Audit Manual Section 0101.20 says that the standard of proof will be the preponderance of evidence. It's a standard relates to the probability of truth, and it can be defined as such evidence when weighed with that opposed to it has more convincing force and greater probability of truth, or more succinctly, more likely to be true than not. The preponderance of evidence standard does not require that the existence or non-existence of a fact be proven by clear and convincing evidence or beyond a reasonable doubt. Rather, it simply requires proof that the existence or non-existence of a fact is more probable than not. She is applying a standard here that is almost beyond any doubt. She says the records are adequate. We've given her a sales journal. She's accepted everything on the sales journal. But if you look at the sales journal, it's in exhibit it's listed in the exhibits. It's a handwritten journal. It lists the date, it lists the VIN number, it lists the vehicle make, the model, and every single one either says Subby or Kim. Some of them say Can, and I don't remember who the fourth person is. But the same four names appear over and over and over again, and she just ignores it. So then again, what you look at when you're left with disallowing all these sales that we can't find the shipping document for, or we can't provide a VIN number on a weigh bill, the only conclusion you can come to, the only reasonable conclusion, is that he is stripping these cars of their parts and has an operation going somewhere where he's selling them, a labor-intensive operation, all for cash. That doesn't make any sense. It doesn't make any sense.
Okay, and I believe the city TFA waived their opening presentation, so I believe we can go on to testimony from the witness, but before we do that, I'd like to swear him in. Mr. Stein, would you raise your right hand? Do you swear or affirm to tell the truth, the whole truth, and nothing but the truth?
Yes, yes.
Okay, thank you. You may proceed with your testimony.
Why don't you just explain why you started the business and how your business model?
Oh, okay. I started this business because I want to have my family. Because this money is like not too much, so I want to like get labor for my family only. I don't know like make a big deal like this because I think everything is everything by law, you know. I have a record everything. So because this one's wholesale, I didn't sell anything in the United States. Everything just I got a commission, small commission only. You know, everything from gold ship to Cambodia. Okay? And this car is broken, you know, they just ship to Cambodia, you know. Yeah, so I didn't sell everything. This business is home office. It's home office. I have no location, no nothing, okay? I have time to do my like government, like clothing store only, you know. Yeah. Thank you.
If I could add, I forgot to talk about the item 2 on the audit.
Oh, yes, if you could proceed.
Okay. So, in the auditor's analysis of the purchases and the sales journal, she noted that there was 3 vehicles that so we're talking about Schedule 1R12G-1. There were 3 vehicles that were purchased, and that there was a significant amount of time between when the vehicles were purchased and when they were ultimately documented as being shipped to Cambodia. So she presumes that the taxpayer made taxable use of those vehicles. Again, these are vehicles, I don't know how you make taxable use. One of them I'll give as an example is a 11-year-old Porsche Boxster that he purchased for $2,490. What kind of condition do you think an 11-year-old Porsche for we'll call it $2,500 is in? You can't even drive this thing. It's been in an accident. It's damaged and destroyed. What kind of possible use could you make out of it? So at the appeals conference, the appeals attorney suggested that he upheld for the department on the grounds that we could not show where the vehicle was during that time, whether it was at his home or whether it was at Packers Express, where it was. I don't know what that has to do with anything. It was at Packers Express. He doesn't keep any of these vehicles at his house. And then the other part of it is, what documentation could we provide that showed he didn't make a taxable use out of a wrecked vehicle? What use could you make out of a wrecked? You can't drive this thing. It's not. You cannot register it unless you have it fixed and have it inspected and have it retitled as a salvage vehicle. The cost of doing that is, again, not worth it. That's why the insurance companies wrote these vehicles off. So I don't know what taxable use could be made out of it. And then to add insult to injury, during the year she finds 3 of these vehicles, and she says, well, during this test period, because we found 3 of them, we're going to develop a percentage of variance projected against the population. So that means during the 3-year period of time, he used 9 vehicles, 9 salvaged vehicles for his own use. This is just absurd. This is the coup de grace. This is an auditor who it almost feels like she's just out to get whatever she can get. Do you want to say anything about those vehicles? Do you use any of them?
Okay. For those vehicles, because the customer, they buy wrong, because they buy for the customer order him. So when they order already, so they need the car win already. So when we get already, another customer, they don't want it. So we cannot do everything. We just put over here. When we take this vehicle, go back to Cambodia, that's more expensive. So we better to put like here, better. When you ship, we have to pay tax. It's double, So we lose a lot of money. That's why it's better.
So what he's saying is, sometimes the buyer in Cambodia, not his customer, but sometimes they already have a buyer in mind, backs out of the deal. Once you become the successful bidder at these insurance auto auctions, you can unwind the deal with them, but it's $1,000. I didn't submit this as an exhibit, but you can look it up on their website. It's $1,000 or 15% of the cost of the vehicle, whichever is more. So when you're talking about the average price of these vehicles is like $2,500 to $3,500. You might as well just hold on to the vehicle. You're not going to pay the $1,000 to unwind it and ship it back to insurance auto auction. So the vehicle sat at Packers Express until, remember, Packers Express is taking their instructions from the buyers in Cambodia. The vehicle sits at Packers Express until the buyer in Cambodia finds another buyer. Why don't they ship it immediately to Cambodia? Because my understanding is if they were to, the vehicle that sits here, all they're paying is a storage lot fee at Packers Express. But if they were to ship it to Cambodia and they didn't have a buyer, not only would they have to pay storage fees in Cambodia, but apparently the Cambodian government requires them to start paying taxes on the vehicle as soon as it's unloaded from the shipping container. So it would cost twice as much money to keep the vehicle in resale inventory in Cambodia than to just leave it in resale inventory here in California. That's what he's trying to say.
Okay, and I believe you provided some testimony, and the witness was sworn in. You weren't, so if the witness could just confirm that what you said is an accurate representation of what would happen in this scenario, that would be helpful.
Is what I just said accurate?
Yes, he says right.
Okay,
Yes.
Thank you. And because you had testified, the City TFA has, if you're finished with your presentation, we'll
Yes.
allow City TFA an opportunity to present questions of your witness.
We're finished. Thank you.
Okay, would City TFA like to ask any questions?
Do you mind if we take like a 5-minute recess just to discuss it?
Okay, so let's resume at 2:40. Does that sound good? Okay.
Yes, everything's good.
That's getting
Yes,
there.
are you gonna
Yeah.
be there? Yay. Have a good job.
But I mean, I just on his point that. Yeah. Okay, let's, City TF, are you ready to proceed?
Yes, sir.
Okay, let's go back on the record, and at this point, we're returning to CDTFA to allow them an opportunity to present questions of the witness.
I have none, but I am prepared to proceed with my presentation.
Okay, I think the panel might have a couple questions for the witness. I did have one clarification because there was discussion about the Sexy Star Design Corporation, and I'm just wondering what the relationship is between Sexy Star Design and VA Auto Sales, the corporation at issue. Are there intra-company transactions? I understand one was a clothing retailer, another is a car retailer, so I'm just wondering what the relevance of Sexy Star Design is. Is that only to show bias with the auditor, issues with the auditor, or was there some other reason to bring in Sexy Star Design?
It was to show bias or inexperience. I don't know if I want to use the right word, bias. I don't know the auditor personally. Maybe it's inexperience. But when we took over the case, we were not the initial representatives. When we took over the case, she was at almost $500,000 in measure, 400 and some odd thousand. And We had to take it to the principal auditor, and he brought it down to 0.
Okay, I got it, thank you. And there was some other references to a way bill referencing one cost auto parts. Are those?
One
Or
lot.
one lot auto parts?
One lot.
Are those in the oral hearing record that we have?
Yes, it's in the list of exhibits presented by the department. You'll see that they say at the top. Sorry, there's over 400 pages. They say at the top, they look like this. They say at the top, Mitsui OSK Lines Limited, waybill, non-negotiable. And then it says shipper, Packers Express. Consignee, the consignee in every single one you're gonna see is either gonna be Subby or Kim, or it's gonna be one of those 4 customers, every single one.
Okay, and if I understand Mr. Sines' testimony correctly, that the invoices for all of the disallowed
There's no
transactions-
invoices.
Or I guess the way bills, what you're discussing and showing me right now, that covers all of the disallowed transactions.
That covers all the allowed transactions, but for example, this one is a perfect example. It has 2 vehicles listed, 2001 Toyota Tacoma, 2002 Toyota Camry, and then right underneath that it says used automobile and one lot auto part. So it's that one lot auto part is what that's the phrase they're using. What's that? Right, so he's got 2 vehicles, and well, this one's I've never seen this. It says used automobile and one lot auto parts. So I don't know if there's a 3rd car that they didn't list the VIN number for, but usually it'll say one lot auto parts.
And that's supposed to cover the disallowed transactions.
So initially that's what she was using to disallow, but then she contacted Packers Express. There's several emails in here, exchange of emails between her and Packers Express. Page 296 is an example where the person at Packers Express went through their records, and I guess they were able to provide VIN numbers for some of the vehicles that were dismantled, but again, not all of them. And so we don't have access to those records, so we don't know how thorough a job, it looks like whoever did this had to do a lot of work. So they might have just gotten tired, lazy, or maybe they don't have all their records in order.
Okay, so I guess my understanding then is for the disallowed transaction, then you did not have way bills in the.
For the
records.
disallowed transaction, we either didn't have a way bill or we couldn't get confirmation from Leland at Packers Express that he provided a list of VIN numbers for vehicles that were dismantled.
Okay, I understand now, thank you. And as far as the issue with whether these are non-taxable sales for resale, I'm just wondering, was any evidence provided to show that the same person who made payments on the allowed transactions also made payments for the disallowed transactions? Or is that information that's not available?
Well, so in my initial presentation, I mentioned that there was a big change in the way that they handled the payments beginning in 2012. I think it's prior to 2012. It looks like Subby and Kim were always sending the payments directly to the insurance auto auctions, but there was a couple, and that's where. So it's 2011 is when there were 2 gentlemen, 2 purchasers that were making deposits, wiring deposits directly to Mr. Sines' bank account at Bank of America, and that's a Mr. Kiev Nairn and a Luan Kokim. So I did an analysis on his Bank of America accounts for 2011. It reconciled to the auditor's Schedule 12D to the penny, and in one account, 99.5% of the deposits were wired in by one person, and in the other account, 86.5% were wired in by one person. The other thing is the auditor relies heavily on, in fact, if you go back to one of her schedules, it's one of the bases for the taxable measure. It's a worksheet. I'm not sure who prepared it, if the taxpayer prepared it or his accountant prepared it. Hold on, I'm going to find it. Here it is right here. This was Exhibit 1 in the auditor's original, so not the department's Exhibit 1 for the purpose of the appeal, but this should be, it's part of the original audit. So this is a worksheet. Who prepared this? You or Advanced Tax? Okay. This is a worksheet prepared by the taxpayer's CPA firm that filed their income tax returns, Advanced Tax. And so he has on here sales. He lists Owen and Subby, costs paid out per client's worksheet, 1.575 million. These are amounts paid directly to the auto auctions. And then he says costs paid out per client's check register, 874,000, which when you look at that 874,000 and you add up all the deposits from those two individuals, plus the branch deposits, it comes to 874,000. So we can't tie a bank deposit to a particular vehicle.
Okay.
But there is, so the way he kept track of it, again, it is in the list of exhibits by the department. He had a handwritten, there's pages and pages of this. This is just an example. So this, he wrote handwritten sales journal. This is in effect a sales journal. It has the date, the lot number, which I'm assuming is the lot number for the auto auction. He has a partial VIN. I think he's just taken the last 5 digits. The year of the vehicle, the make of the vehicle, the amount, and then the customer's name. Page after page after page. So again, a reasonable auditor would look at this sales journal and say, see the same names over and over again, Subby, Kim. You would be, most people would conclude that these are sales for resale.
Okay, this is in the record? What the sales journal that you're referring to?
This is in the record, this is one of the exhibits provided by the department.
Okay, great. And I have one last question for Mr. Sine. And I just wanted clarification on the 3 disallowed vehicle transactions. What happened to them? Where were they during those 12+ months that between the purchase date and the date it was ultimately shipped out to Cambodia? Was that sitting on a, like where did you store them, or where were they stored?
Yeah, the 3 vehicles, the Porsche, the.
It's still there. I think it's still there.
But during the period of time between the where they were shipped to Packers Express and during the time that they were ultimately shipped to Cambodia, where were the vehicles? Were they at your house?
No,
Were they at Packers?
not my house. I have nothing.
They were at Packers Express.
Because they cannot try in the Packer Express.
Okay.
So my understanding in discussion with them is that Packers Express, again, they're taking their instructions from his buyers in Cambodia, and my understanding is they're charging a storage fee while the car is sitting in their facility at Packers Express. But because they're sending these bills to his customers, he doesn't have them.
Okay. Do either of the co-panelists have questions at this point? Okay, go ahead.
Just one quick follow-up question to that. Did anybody try to get records from Packers Express about storage, to get like storage documents that could be tied back to those 3 vehicles?
We didn't, but we don't dispute that the vehicles were here in California for a year or whatever. What we're saying is that they were sitting essentially in resale inventory, and they were never used. I don't know how you use a salvage vehicle that can't be driven. These vehicles are, go to the Insurance Auto Auction website and look at the vehicles that they're listing for sale. They're all smashed up. You wouldn't drive these things on the road. Well, that's the other thing, and we again, it's one of our exhibits. He has a personal vehicle. We provided a copy of his registration. He has no need or reason to drive a wrecked vehicle around. He has a perfectly good late model 2011 Toyota Sienna. Why would he drive around a wrecked vehicle?
So,
Again, this is what I mean about the inexperience of the auditor, not being inquisitive, not asking questions.
Can I ask a question? Okay. Go ahead. I just would like to turn to CDTFA briefly. So I guess with the, well, I guess I don't want to jump the gun before you address the use tax issue, so maybe I should. How about we let CDTFA do their presentation, and then maybe the panel will have some more questions at that point.
There are a few more issues that were raised by that. May I ask questions of the witness?
Oh, yes, of course. Go, please proceed.
Sure. Mr. Stein, you indicated that the 2011 Toyota sorry, can we turn on my speaker?
Thank you.
Mr. Stein, you indicated that the 2011 Toyota submitted in as Exhibit 79 is your personal vehicle. Is that correct?
Is that your personal vehicle?
Yes, sir.
It's
That's
noted
dealer.
as
I buy from the dealer. Payment is on for payment.
it is registered to a Selena Lee. Is that correct?
Yes, my wife.
And that's at the Commonwealth Avenue address.
Yes, sir.
It notes an amount paid of registration of $21. Is it your contention that that is a registration fee for that vehicle?
Was that the registration fee that you paid, $21?
That's on my wife account.
Pardon?
I'm sorry, if the parties could speak into the microphone because these are being
my wife
recorded
took
by-
care about this one.
Okay, but was that the total amount of vehicle fees paid?
Oh,
for
yeah,
that?
free the sticker. The sticker, right? This one got sticker. This one got sticker.
For the registration sticker?
Yes, sir, yes.
So you pay $21?
Yes, sir, yeah.
Okay.
Isn't true $21 is the fee that you pay for a non-op vehicle, and that registration would actually be much greater?
So is that the fee for registering the vehicles non-operational?
I don't know. I don't know this one, but my wife took care about this. Because my English is not very good, and the letter is not very good. It's on my wife to care about this.
Isn't it true that registration for a vehicle, a Toyota 2011, would be well over $100 a year?
I don't know how he would know that, but that
Well,
sounds right.
He does deal in
I
vehicles,
don't
correct?
know, yeah.
Well, he
Right now, I
doesn't-
try my mistake now, right now. Yeah.
Yes,
Up
but
and down.
you paid, or she paid $21,
Yes, sir.
which is the standard fee for a non-op vehicle.
She pay everything.
And it's your contention that this is the vehicle that you use to drive?
You used to try, yes,
Yes.
yes.
Thank you. I have no further questions.
Okay, so are you ready to proceed with your closing presentation or
Yes.
your presentation?
Yes.
Okay,
Thank
great,
you.
thank you.
To begin with, we would object to the consideration of items that have not been included in evidence, and that would include the unsworn testimony of Mr. Brandeis. We would also note the numerous inaccuracies of Exhibit 80, and would ask that the panel give it the weight we feel it is due. There are at least a dozen inaccuracies. There are at least 4 unknown source deposits that total $15,181, and there are 5 transfers between the 2 accounts, totaling $10,250. So the summaries are incorrect because they're not actually other wire deposits as noted in the summaries, and that is shown by the actual bank deposits in evidence.
Right, and I did state at the beginning of the hearing that evidence that we would consider as sworn testimony under oath to the extent that there was testimony that was not affirmed by the witness, then that would not be considered as evidence by this panel. We would consider any arguments presented by counsel. As far as the issues with our objections to Exhibit I could afford the CDTFA an opportunity to provide, after the hearing, any objections it has to specific inaccuracies. Otherwise, the panel could consider it and give it the weight that we feel it deserves, and take into consideration the exhibit with other exhibits as we feel appropriate, and close the record after the hearing. If you would like additional time, I'm offering that to you now. Otherwise, we'll just close the record.
We would request that the record be closed. We simply would point out those inaccuracies which are refuted by the bank records and evidence.
Okay, I understand that CDTFA does have an objection, and that is noted on that basis.
Thank you. Appellant is a business located in Alhambra, California. It's a licensed seller of salvage vehicles and auto parts. According to Appellant, its customers browse online insurance auto auctions to choose vehicles, but since the auctions are only open to DMV licensed dealers, Appellant purchases the vehicles and then resells them to its customers. Taxpayer claims that all the salvage vehicles it purchased were shipped to international customers, and as such were non-taxable sales in foreign commerce. The audit methodology and calculations are not in dispute. Based on Appellant's purchase journals and logs contained in Exhibit C and E, and vendor reports of Exhibit D, it was determined that its purchases totaled over $6 million during the liability period, January 1st, 2011 through December 31st, 2013. During the agreed upon test period of third quarter 2013, 74 salvage vehicles were purchased at the cost of approximately $335,000. Audit staff accepted Appellant's contention that the only markup on its sale was a $70 commission, which equated to $5,180 in commissions during the test period, and a computed markup of 1.54%. Applying this markup to the liability period, Appellant's audited gross sales were about $6.2 million. Appellant did not provide adequate sales or shipping records for the test period, so audit staff obtained third-party shipping records, found in Exhibit A2 and Exhibit C. There was no record of shipment out of state for 29 of the 74 vehicles sold during third quarter 2013, or 39.51%, based on the vehicle identification numbers provided by the third-party shipper for cars shipped intact or in parts. This is reflected in Exhibit D, pages 67 through 76. As you can see from Exhibit E, audit staff exchanged multiple communications with the shipper to obtain and confirm complete records for the test period. Projecting the 39.51% rate to the total audited gross sales for the entire liability period, Appellant was determined to have disallowed claimed exempt sales of about $2.4 million during the liability period, reflected in Exhibit D, pages 63 and 64. Contrary to Mr. Brandeis' claims, there were in fact VIN numbers associated with those, and we attributed them where possible, where the evidence showed such. California law imposes sales tax on a retailer measured by the gross receipts from the retail sale of tangible personal property in the state, unless the sale is specifically exempted or excluded from taxation by statute. All of a retail's gross receipts are presumed subject to tax unless the retailer can prove otherwise. According to Regulation 1620A3B, sales tax does not apply when tangible personal property is required to be shipped and is shipped to a point outside the state by the retailer. Regulation 1620A3D requires that bills of lading or other documentary evidence of the delivery of the property to a carrier for shipment outside of California must be retained by the retailer to support an exemption for interstate or foreign commerce. The taxpayer bears the burden of establishing its entitlement to any claimed exemption, and it is the taxpayer's responsibility to maintain and make available for examination on request all records necessary to determine the correct tax liability. If a taxpayer's records are insufficient, it's appropriate for the department to use alternative means to establish and compute the taxpayer's liability. Where the department's determination appears reasonable, the taxpayer bears the burden to explain why it's not valid. In this case, gross sales were calculated using Appellant's own purchase journals, logs, and vendor reports received from the auction houses, and there is no dispute as to the measure of gross receipts established by the audit. Despite ample opportunity to do so throughout the audit process, and as reflected in the email correspondence of Exhibit E, pages 115 to 325, and the 414Z action log starting at page 340, and during the appeals process, appellant failed to provide any documentation supporting its entitlement to the exemption with regard to almost 40% of its sales during the test period. With regard to appellant's exhibits 1 through 72, the bank records, they were reviewed and summarized at the time of the audit in Schedule 12D, Exhibit D, page 101. They do not change the analysis or conclusions. That there were only a handful of purchasers is not relevant. The relevant issue in this appeal is whether the property purchased and sold was shipped out of state, and as to almost 40% of the property sold, the taxpayer has provided no evidence to support its entitlement to the exception. Rather, the evidence provided by the third-party shipper indicates that that portion of the property sold was not shipped out of state. As a separate matter, as shown in Exhibit D, pages 77 through 78, the shipping records indicate that among the vehicles that were shipped by appellant in third quarter 13 were a 2003 Mercedes S500 purchased in March 2011, a 2003 BMW 745 purchased in September 2012, and a 2001 Porsche Boxster purchased in December 2012, meaning that appellant retained the vehicles in California for respectively 2.5 years, 1 year, and 9 months prior to shipment. Regulation 1669.5A6 states that vehicles withdrawn from resale inventory for personal or business use are subject to tax. The tax is measured by the purchase price of the vehicle. Since appellant has not provided any documentation regarding the use or storage of these vehicles, audit staff reasonably determined that the vehicles were withdrawn from resale inventory and used in California during these extended periods. Since there is no specific information regarding the use or storage of these vehicles, it was also reasonable to attribute the withdrawal from inventory to the year 2013, the year in which audit staff had a more complete picture of appellant's business, and project the error onto 2011 and 2012. Appellant has not produced any evidence indicating that this determination is not valid. Mr. Brandeis has stated that how would we possibly show that? You would show that by the storage bills, which would have been the case at the shipping yard or the shipping company. In conclusion, appellant has not provided sufficient evidence to show an entitlement to an exemption with regard to the undisputed measure of gross receipts during the audit period, and has failed to establish that it held the 3 vehicles in its resale inventory, in one case for as much as 2.5 years. Therefore, we request that the appeal be denied. Thank you.
I'm going to add something as well. In response to some of the things that have been discussed here, we note that with regard to the 3 vehicles, I believe appellant has testified that they were sold to his purchaser, and then that purchaser stored them in California during that period. That's what was testified to today. We note that to meet the exemption for sale in interstate commerce under Regulation 1620, it needs to be delivered to a shipping agent or some other agent with an irrevocable commitment to the exportation process, and it can be stored in state for a reasonable time pursuant to that exportation process. So alternatively, we don't have evidence, and all we have is the testimony that that happened. So it's still a reasonable determination those were withdrawn from resale inventory by appellant. Alternatively, even if what they're saying here happened, those were sales that were made in state, and they wouldn't be subject to the exemption for out-of-state, for interstate commerce, because they were not delivered to a forwarding agent with the irrevocable commitment to the exportation process, given that they were there for up to 2.5 years. With regard to the sales that there's no shipping information, again, as Ms. Paley said, there's no evidence of their use in California, and I think there's conjecture of what could have possibly done with them. There's no evidence that they could not have been sold in a retail sale, but we do point and consumed or used by the purchasers in California. But we do note that if, as Mr. Brandeis is contending, that even if they took place in California, they were sales for resale, that we have there are statutes and regulations on how you establish a sale for resale in California. Under Regulation 1668, the burden of proving that a sale of tangible personal property is not at retail is upon the seller, unless the seller timely takes in good faith a certificate from the purchaser that the property is purchased for resale. and subdivisions E and F of Regulation 1668 establish what evidence you could provide in the absence of a timely taken resale certificate. So again, we go back to the basic premise of this case, which is a lack of documentation by the appellant. If these were sold in California, and as Mr. Brandeis is contending that they were sold for resale because they couldn't possibly have been used by those purchasers, then appellant should have taken a resale certificate at the time, or otherwise proven that they were resold in fact. And I think there's one other point that we wanted to make, which is that in that correspondence, and I think you can provide the sites on this, but in that correspondence with the shipping company in terms of determining which vehicles were shipped and which were not, those notations of one lot of the one lot of auto parts were discussed, and they provided, and what are the page numbers of the summaries they provided?
The summaries are
Yeah.
added.
No, the emails. Yeah, starting on page 283, they provided information as to those lots of auto parts, and they indicated the VIN numbers of the automobiles that corresponded with those lots. So the information, so the audit is based on the correspondence with the shipping company in which they provided VIN numbers for the automobile shipped in as lots of auto parts, as indicated on these bills of lading, and not just the cars that were sent.
Okay, and just clarification on issue 2, like, I guess on audit, that was based on a test period of the third quarter of 13, is that correct?
Yes.
And according to the DNR, the disallowed vehicle transactions, one was disallowed in 2011 and 2 were disallowed in 2012. That's outside the audit, the test period. I was just wondering why those were projected into the test period.
Into when they were purchased.
Right.
Well, so, I mean, again, the test period is for the sales tax due on sales where there's no evidence they were sales in interstate commerce. I mean, those were purchases picked up where the audit picked them up as use tax transactions.
So on page 359 is the 836 report of discussion written by the district principal auditor. And in the discussion.
Could you turn on your microphone? I'm sorry.
It is on.
Oh, okay.
Okay, can you hear me better?
Okay, that's fine.
So
Turn off the other mic.
It is on.
Yeah.
okay. So there was other items that the auditor was asked to look at. I think mine's going in and out. Want to switch? So the auditor was asked to do a test of third quarter 2013. I believe that was agreed upon. And then the district principal auditor also noted that it didn't appear that we had all purchases of vehicles, and asked the auditor to look if there was any other known sources of vehicles. So while the auditor was doing her test of third quarter 13, and she was matching the sales with the exemption documentation, she was also looking back to see when it was purchased. And in most cases, those purchases and then subsequent sales were fairly quick. On these 3 vehicles, there was the Mercedes, the BMW, and the Porsche. One they found in the purchase records 30 months before, one was 12 months before, one was 9 months before. So she looked back to see, do we know those purchases? And once she noticed those, that's where it became a separate item. It's not part of the test of sales. It's these purchases that were made and were never sold. And those were the only 3 they noted because they only looked in that test period. Had they expanded it, they could have found more. We don't know, or they could have not found any more. But in this third quarter, they found 3 vehicles that were purchased months ago and then later sold. And so the question is, what did they do with them?
Right. Right, and I'm just curious because, so you added up the 2011 transaction plus the 2012 transactions came to 15,000, but then that was multiplied by 3. But these were picked up from 2 different years. So I mean, I just was curious about the methodology for that.
Okay, so we did a test of third quarter 13, and had we done that, we found 3. The auditor could have multiplied that and said every quarter you must have 3, but instead the auditor said, no, I'm going to say every year you have 3. Because normally when you find an error, you would project it.
Right. I guess where I'm getting confused is that the error is the purchase, not the resale. What the disallowed transaction was purchase. You're just allowing the purchase in 2011, the purchase in 2012, but you're treating it as occurring during the test period of third quarter 13. That's what I guess where my mental block is, because what you disallowed was the purchase transaction. I said that's a use, but then it's being projected based on the third quarter 13.
Well, the idea is that if we looked at, say, fourth quarter 13, we could have found cars from 2012, 2011, 2010. We in this test period, we found 3 transactions that were purchases that were not resold later on, until much later. So it's completely separate from the test of sales.
And I think to answer that question, again, since we don't have information of what happened to these cars and there's no documentation, if these were purchased for resale and withdrawn from resale inventory, the use would have occurred when they were withdrawn from resale inventory, and we don't know when that was. And so at what point in the 9 months, 12 months, and 35 months or 38 months that these were being held.
Okay, well, I don't want to get too stuck up on this issue, but I did have just, I guess, one more question on that. And I mean, it seems like you have a DMV licensed wholesaler with a seller's permit for the specific type of property at issue, and that property is being sold in the regular course of their business because a number of other transactions were allowed. The property is basically a wrecked salvage title vehicle that they can't legally operate. The taxpayer states it wasn't used. CDTFA's own audit records admit that it was in fact resold at some point. I mean, it just doesn't seem like this is the type of transaction we normally pick up a person for and say that based on the amount of time it's something that was pulled from resale inventory. It seems like this is, I mean, like there's a lot of stuff there, and I'm just wondering if I'm missing something here, or if you could help me understand, I guess, in this taxpayer's case, why this was specifically pulled out and identified.
I mean, again, I think that was based on the fact that we don't know what happened, and given the length of time, they used a preponderance of the evidence. What is more likely than not that it, without any evidence of where it was it used in California or not? And then we also know that the testimony at the hearing today was that it was not sold in interstate commerce.
Okay, I understand. Did the other panel members have any questions today? Okay, then I believe we're ready to close the hearing. Is there anything further from either party?
I'd like to address, provide a rebuttal to their testimony on the withdrawal from resale inventory.
Okay, please proceed.
So if we look at it from a accounting standpoint, from a law standpoint, what's going on here, the sales are being made from the insurance auto auctions to Mr. Sign. There's a transfer of title of these vehicles from the insurance auto auctions to Mr. Sign. Mr. Sign has a resale certificate on file with the insurance auto auctions. Those sales are sale from resale. They then sit in resale inventory of Mr. Sign's books until he arranges payment or invoices the customers in Cambodia and transfers title to them. I guess technically you could say while those vehicles are sitting here in California, those vehicles belong to the customers in Cambodia. But sometimes an unwind happens. This happens in business all the time. But generally speaking, when a transaction is unwound, the item that was being sold is put back into resale inventory. There's never ever any use of it. And again, what the absurdity here is the specific item we're talking about, there is no use for it. There's no use for a wrecked car that you can't drive. So, you know, the department to say that it was withdrawn from resale inventory is absurd. That's an interpretation of the law that is just bizarre. Second, Mr. Claremont cites Reg 1668 and says that the burden of proof that a sale for resale is upon the taxpayer unless the taxpayer takes a timely certificate in good faith in the form set forth in subdivision B of that regulation. If you listen to his testimony, he makes it sound like unless you have that resale certificate, that sale would be disallowed because you don't have this document. That is furthest from the truth. Anybody that looks at an audit manual knows, if you read the audit manual, if you don't have a resale certificate, auditors shouldn't pick something up just because you don't have a resale certificate. You would look at the nature of the transaction, you would look at the type of things being sold, the character, the quantity, the units. Maybe you have personal knowledge that something that's being sold is clearly being sold for resale. You know, when I was an auditor in training, one of the things they said, if you go out, you're auditing a company that sells widgets, and you see an invoice for 10,000 widgets to XYZ widget company for resale, and there's no resale certificate, you'd be foolish to pick that up. What is XYZ widget company doing with the 10,000 widgets that they're buying? Clearly they're reselling them. You're gonna pick that up and say you don't have a resale certificate? You would be laughed at. You'd be laughed at. So this is almost the same thing. They're selling hundreds, literally hundreds and hundreds and hundreds of vehicles to these same 4 individuals. And he's saying that that's not relevant? That's absurd.
Okay, thank you. I believe we're now ready to proceed unless the panel has any questions at this point. Okay, thank you. This case is submitted on August 21st, 2019, and the record is now closed. Thank you everyone for coming in today. The judges will meet and decide the case later on, and we'll send you a written opinion of our decision generally within 100 days from today. Well, the date the case is submitted. Thank you. This hearing is now adjourned.
Thank you.
Thank you.
Thank you.